This week was all about jobs, and again, the numbers looked stronger on the surface than they actually were. The big jobs report, that's the BLS report, came in better than expected. We saw more jobs added, and employment did tick down, which sounds great, but when you look under the hood, it's actually not so clear. A lot of that strength came from seasonal adjustments that don't really fully make sense. For example, they added a bunch of education jobs in the middle of summer when schools are out, and the raw unadjusted numbers actually showed job losses. Earlier in the week, we got another jobs report, ADP, that showed private companies letting go of workers for the first time in over a year, and wages are actually growing more slowly. Both of those things are signs of a softening job market. But because the headline numbers look decent, the Fed will likely delay cutting rates this month. And with that said, mortgage rates didn't shoot up. We did see some slight worsening in rate sheets, but nothing major. Most traders took off early for the 4th of July weekend. Rent and home price numbers, and they were kind of mixed. Rents were rising, but slower than usual, and vacancy rates are actually higher, which is going to give renters more breathing room. But on the home side, prices have continued to climb, and totally separate news, the Senate is racing to finalize what they're calling the One Big Beautiful Bill. You've probably heard about that. And that could mean more government debt, but markets have already seen this coming, so it shouldn't impact that much. Interestingly, there's been talks about cryptocurrency, specifically a US-backed stable coin that might help offset that debt by buying short-term treasuries. Really wild times, but also, if you saw headlines about rising delinquencies, the full picture is not as scary as it sounds. Short-term missed payments are slightly up, but long-term delinquencies are actually down. This week should be calmer, but we'll be keeping a close eye on how the market digests all this and whether we get any new signs of weakness that could push rates lower again. Till then, have a great weekend and happy 4th of July.